Hi guys, welcome to Chatting with GB. I am back with a trading analysis video. So tonight we're going to go over how I read the market, how I go through my strategies. So right now we're going to be going over the pair GBP USD. I'm really a indices girl. So let's just go ahead and get into it. If you haven't subscribed, please subscribe. If you want to see more content, or if you like the content that I've been posting lately, just make sure you go watch all my videos and thumbs up it. So also, make sure if you want to keep up with my posts, with my trading analysis, or you're just wanting to start trading, but you haven't really made a decision if you want to trade or you want to see what it takes to actually become a professional trader, please make sure to subscribe to my Telegram channel. I would love to have you guys. So let's just go ahead and get started. Now, the number one thing that I want to just go ahead and put out there, the easiest way to be profitable when trading is to simplify your trading. If I had to give a beginner a piece of advice, stay consistent, be patient, and don't be greedy. Those are my top 3 things that I would recommend to a beginner, pieces of advice that I would give anyone, not even just the beginner, anyone, any trader. So let's just go ahead and get started. So here we have a break of structure. So this will be considered a break of structure, right, guys? And this will be considered a break of structure. This will also be considered a break of structure in this area. Okay, guys. So as I'm talking, I'm just going to type little notes here. A break of structure, guys, is basically just the market creating higher highs or lower lows. So all that consists of is the price moving up higher than the previous high or lower than the previous low. It's very simple. So for example, this is considered a break of structure because price was at 1.49 area, right? And then it breaks that area and moves up to 1.5. Then it breaks the 1.5 and moves up to 1.53. Then it breaks the 1.53 and moves up to 1.55. Very simple, right? Very simple. So from here, I've started to notice that, okay, price is moving up, right? So we'll consider this when price is moving up and it's creating higher highs. We call that, where am I? Bear with me, y'all. Okay, here you go. Way down there. We consider this uptrend, right? I'm also going to highlight. So we have a high, high, another high, and another high. Boom. So keep in mind, guys, I am doing this chart analysis on a day chart. Each candlestick on this chart is one full day, is one day. You can get better entries. You can have more leverage, more room to sit on your trade. You can make larger profits. But from Tuesday, February 5th, all the way to Tuesday, April 29th, it took the market that long to make this uptrend. So let's just say all you had was this move right here. All you will have to do is on an uptrend, we're looking for demands. So on your higher time frame on an uptrend, you're looking for demand. So if it create a higher high, you know you're waiting on the market to come back to. See, I'm telling y'all, it be my nerves. You waiting on the market to come back to your demand zone, and we're just gonna make that large so y'all know, like, this is the demand zone, right? So once the market come back in this area, all you would do is get in your trade here for a long. A long basically means buying. So a long just means buy to buy. And you would set your stop loss, hop in here, right? And you'll have all that to make your profit. Got it? Let's begin here. So I've showed you how you can enter on an uptrend when you're getting buys, when you have the opportunity to get in the market for buys. Your market is creating higher highs, you're breaking structures, and you're looking for demand zones, which is at the bottom, below, at your support levels here. Support. Now we see that the market decided that, okay, we made our higher high. And the market decided that it wanted to turn around, right? How do we know this? If we pay close attention to this area, the market did not create another higher high. The market is here. Now the market is there, right? This move is now considered your change of character. What do I mean by that? So we have a higher high, a higher low, 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 and then it creates a lower high. So now once the market decides, okay, we're not going to make a higher high, we're going to make a higher low, which means it's still up, it's still close to our previous higher high, but it's lower than that higher high. So you can't consider that valid. This now lets you know that sellers are coming in the market, basically. And so now that we got our higher low, what do we do next? We wait. So we say, okay, we got our higher low. This is now a change of character. So we wait. On your higher time frame, when the market is beginning to go in a downtrend, you now know that this is your supply zone. We'll just put it above there. So now we know this is the supply zone. Let me make that larger since I made that one bigger. Okay, so now you know that now we're making supply zones. So all you will have to do is wait on the market to come back to this zone. So we had our change of character, the market breaks and make a lower low. So we had the higher low and it makes the lower low. So this would be, like I said, this would be a break of structure, right? The market either is going to move sideways, up, or down. You have the break of structure here. Now we wait until the market comes back to our zone. As we can see, the market came back to our zone, right? So what we'll do is boom. So the market comes back to our zone here. And once the market comes back to our zone, this is where we'll get in for our short position. Short is another term for sells. we'll get in for ourselves. And as you can see, the market sold off pretty far. So we can get in for a sell here. And as you can see, the market pretty much sold all the way from 1.5 all the way to 1.3, and you could have held this entire trade. Now this is days, y'all. Like when I say this is days, but that's bread. Like this whole sell here, this whole move is money. Okay, money. So this is what I mean by the market goes up, the market will go down, the market will go down, and then you see how the market like kind of, it went up a little bit, came down, it went up a little bit, but it wasn't like breaking below this zone until it got here. So technically this area here, usually areas like this I consider ranging, right? Some people call this area consolidation as well, which just means the market is moving sideways. Like it's moving up and down, but it's usually ranging between these same numbers, the same price area. So you can see here where price is not, it's like playing around the 1.46 range, right? And then you have it not breaking above the 1.5. And finally, when we get our first break below, it's like 1.45. So then now we say, okay, we got a little break to the downside, pretty low. Okay, let's see what the market does. So we're going to see if the market wants to push down, and then the market say, okay, I want to create a support level here and continue to go up. That's an option if it breaks through. Or the market is going to do what it does and say, oh, I'm going to create support, and boom, I'm just going to keep going down. I'm just going to go ahead and push through. And then this is when you know, like, okay, it broke even lower, our last previous low, which would have been here, because let's see. Look, you have the lower low, lower low, lower low. After it breaks out of consolidation, it makes another lower low. And then we say, okay, we're going to wait until the market comes back up. So it's either going to retest here, and we're going to see if it goes up, or it's going to retest in this area and come back down. And it decided to just break through all the way through. But this is an easier way. This is more like if you want to be so precise and wait on every move, you can do that and wait on every move. But watch this. So I'm going to remove everything on this chart, right? And I'm going to show you. I know you're going to be like, girl, you went through all of that when you could have just showed us. But I want you to understand, like, before I could become a more profitable trader, I had to learn how to read the market first in order to see these things, or in order to be able to identify what I'm going to show you, right? So check this out. So as time went on, right? So instantly, I just noticed, like, okay, now this is how I read the market. I can still identify the breaker structures and write everything on a chart. But now that I'm more experienced and like I've kind of molded my eyes, sharpened my skills, I don't have to type 10 things on my chart. Like I don't have to have so much on my chart at one time anymore. So boom, right? But check this out. So we have a breaker structure here, we have a breaker structure here, and we got a breaker structure there, right? But here we got, let me see, do I have a, okay, no, I don't have it. So I'm just going to type it here. So this is a double top. The market formed a double top, right? So anytime you see a double top, the market is usually in a downtrend. Let's just say after the neckline breaks and I say, oh, I want to take a small short, I can get in here. If I have enough money in my account to survive this pullback up to my zone, but if I hold it and I wait, I'll have all this room. But that's why I say anytime you see these things, like, you want to wait and see what the market does. Like I said, anytime still when you're seeing things like this where the market is creating double tops or the market is starting to move in a downtrend, this is still considered where your supply zone should be, right? So the same concept applies. This is just me showing you a simpler way. If you're not necessarily like very familiar with the break of structure, like if you're not learning those things yet, this is a way you can look at the market and simplify it, but it might be harder if you haven't quite mastered how to read the market. This, like I said, can be considered your supply zone, and you're going to wait until the market comes back up. Boom. Another way, something else I see. So boom, we got a shoulder, we got a head, and we got a shoulder. So this is basically saying the market moved up, moved higher, moved lower. Anytime the market has a head and shoulder, anytime the market makes a head and shoulder, we know off the rip we getting short. Okay, so look, check this out. So once we get that last shoulder, we go ahead and like say, okay, we're gonna get in on that next open, which will be like right here, right? Or if you want, we can get in on that next one, right? Then we can set our take profit around like our last support, which could like close to our last support. You can do it here, you can do it around this support, you can do it around that support, or you can reach for that support. But if the market doesn't go that low and you start to see the market turn around, just hop out. Don't be greedy, because one thing I've learned, I'll place out into the market and have an idea of where I want to take profit, and it has not reached my take profit in a timely manner, and I've tried to hold hoping it'll reach my take profit, and price eventually just said, forget you and your take profit, and we just gonna take your money, the money that you made, the money that we gave you, we just gonna take it back because you being greedy. So that's how I be looking at the market. Like, I don't learn my lesson sometimes, because sometimes I still do it. I'm human. I'm humane. So this is basically like a whole move here that you could have caught, and like I said, this is on a higher time frame on your day chart. So technically, ideally, this is bread. Like I said before, this is money. So we do have, like I said, like I brought to your attention before, we did have this consolidation period where price kind of played in this area, and it didn't really, because it could have bam, like it literally could have done that and went like the opposite way. And then let's just say if you would have gotten in here, it definitely would have took you out. But that's the point. That's the point of setting your stop loss, okay? That's the point of this stop loss here. So that way, if the market returns to this area, it'll stop you out and you won't take an L. Or if you do, it'll be a small percentage of your account. So that's the purpose of a stop loss. Or let's just say if you didn't want to get in that early and you wasn't sure, you could have seen, okay, we got the head and shoulders pattern, and you could have waited, say, all right, the market created this lower low, right here. And you say, okay, well, it's consolidating, price keep going up, but it's not breaking below this level, because for a good little minute it kind of stayed above this level, like it wouldn't break that low, and then it went up, came back down, price went back up, rejected off this area, came back down, and then finally it created that lower low that you needed. So now you can say, okay, the market wants to move down. Now what you'll do is you can get in here, but I wouldn't get in here. I will wait until that pullback comes. So let's move this out of the way. I will wait until this pullback comes back up here, and then once you get your pullback, boom, you can shoot for this ratio, this short position right here. And then as you can see, even after that, what did the market do? It started to consolidate again, pretty much. It did make, like a lower low. It made a lower low, but check this out. It made a lower low. It made an even lower low. This is also like a lower low. But look, the same thing I showed you here, a head and shoulder, right? And the market moved up. So then we got a lower low. This is a even lower low. But then check this out. Then the market stopped making lower lows. Like our next move was way up here. Like we didn't get any more up here and down here. We got it. The market decided to go way up here and here. Boom. Y'all know what that means, right? If we have a head and shoulders pattern right here, right? Where it's 1, 2, 3. 1, 2, 3. And even if, let me see if I can draw 1, 2. Oh, wait. Sorry, guys. This is the wrong one. But we have a 1, 2, 3, right? Boom. All right, now check this out. So we have 1, 2, 3. Boom. Whoa. See, I told y'all, my mouse be tripping. I'm so sorry, y'all. So we got 1, 2, 3. Boom. And check that out. Another triangle. And y'all know what's happening now? Since we got so this is a head and shoulder, right? The opposite of that. Very simple. Very simple. Let's just take the S off. The opposite of that is an inverse head and shoulder. So if a head and shoulder means we're selling, and then you get an inverse head and shoulder, what y'all think that means? Tell me. In the same area, like I said, when the market is starting to form things like that, this is now going to be a demand area, right? This is going to be a demand zone. Because now the market is going to be trending up. So let's just put 16. So this is also going to be our demand zone, right? So let's see what happens. Boom. And you see, the market ain't even come back down to the demand zone, which technically potentially happens, So the market, sometimes it will not even come all the way to your demand zone. So even if, let's just say, you wanted to say, okay, this is my demand zone, make this your demand zone. So that way, not the lowest one, but make that last touch in this area your demand zone. And then when it comes back in that area, let's just say when you've seen that initial pullback, that's when you get in here. And do y'all see that move? Money, y'all. I think I'm gonna stop here. Only because I feel like this is a lot to, it's like it's not a lot, but it is a lot. But I think this is the simplest way I can like show you how I simplify the market. And as you can see, it's legit. All it is taking all the knowledge that you know, breaking it down and making it make sense, but in the simplest way. Okay. I hope you guys enjoyed this video. As y'all can see, like, I will sit here and do this all night. And make sure you like, comment, subscribe, and make sure to subscribe to my Telegram channel as well. I would love to have you guys join me in this journey, and I would love to help y'all make some money. In this trading industry, we need each other, bro. Like, this get lonely, okay? You know, it's great to be around like-minded, motivated individuals, and it gives you an extra push to just push forward, because you can do this. If I can do it, anybody can do it. Okay. Thank you for anybody who's been supporting me on this channel. Thank you for anybody who liked and subscribed already. We're gonna go ahead and cut it off here. In the meantime, in between time, stay blessed.